The basics for investing in stocks. Although they are unpredictable over the short term, stocks have delivered superior returns over the long haul. All about technical analysis. This is actually a third school of stock picking. Technical analysts make decisions based on observations of historical market and stock trends and current data. They study patterns of price movements and trading volume of the market and individual stocks, looking at such things as moving averages and relative strength. Practitioners of technical analysis pay little or no attention to fundamentals. They may not even care what business a company is in. Many academics scoff at technical analysis, but the technique has many passionate advocates. All about preferred stocks. Preferred stocks have elements of both stocks and bonds. As with common stock, companies issue preferred shares. Preferred stock ranks higher than common stock in the company's capital structure, which means that preferred shareholders are paid dividends first and have a better chance than common shareholders of being paid off if the company goes into bankruptcy. Bond investors, however, have a higher claim on a company's assets than holders of preferred stock. Preferred shares resemble bonds, in that dividend payments are typically high but fixed. As such, preferred shareholders cannot benefit in the growth of the company, but neither are they hurt if the company stumbles a bit. In fact, preferred share prices tend to behave like bond prices, rising as interest rates fall and sinking as interest rates rise. But unlike bonds, most preferred stocks do not have maturity dates, and the issuers of the shares, unlike borrowers paying interest to bondholders, are under no legal obligation to pay dividends to investors. Beware penny stocks. Take extra care with stocks that sell for extraordinarily low prices. Just because a price is low doesn't mean the stock is cheap, according to traditional ways of determining value. Penny stocks, defined by the Securities and Exchange Commission as stocks that sell for less than $5 per share, often deserve to be low-priced. The company might be in deep trouble. Plus, penny stocks are subject to manipulation, particularly schemes to inflate their share price temporarily. It's crucial to do your homework before investing in a penny stock. Many penny stock companies don't file regular financial reports. If a company you're interested in doesn't, stay away. Dividend reinvestment plans. A dividend reinvestment plan is a low-cost way of reinvesting the dividends you receive from a company whose shares you own. When you purchase shares of a company with a so-called DRIP, you can direct the company, when it holds your shares, to reinvest your quarterly dividends for little or no charge. DRIPs are particularly helpful to small investors because the plans allow investors to buy fractional shares. DRIPs also allow you to make additional investments in a company's stock, either on a regular or occasional basis. Not all companies have DRIP plans. To find out whether a company offers one, go to its website or contact the company's investor relations department. In general, you have to own at least one share of a company's stock before you can sign up for its DRIP. However, several hundred companies let you buy your first share directly from the company at little or no charge. Once you've signed up, you can buy additional shares through the plan. Fact-finding. Sources and what you'll find inside the web has made it easier than ever to conduct your own research on stocks. Below is a basic guide to locating the key facts on companies. Company websites. Spend some time on the investor relations section of the company's website. You will find a wealth of information, such as stock price and dividend history, investor presentations, and important financial documents, such as the annual report. The annual report contains audited financial statements from the most recent year, along with data from previous years. You can download the report from the website, obtain a hard copy from the company's investor relations department, or request a copy through your broker. Analysts' reports. Brokerage firms' research departments publish reports on companies that they follow. These reports contain financial numbers, analysis, and analysts' stock recommendations, such as buy, hold, or sell. You can obtain reports such as these from your broker. Some online brokers offer research produced by full-service brokerages as well as independent research from the likes of Standard & Poor's and Argus Research. Wrap-up stocks merit a substantial place in your portfolio. Because stocks are volatile assets, they belong only in portfolios invested for medium or long-term goals. Be sure you have a diversified blend of stocks that includes a helping of foreign shares. Do your homework to ensure that you aren't overpaying for the stocks. If you don't have the time, ability, or inclination to buy and sell individual stocks yourself, consider delegating this important responsibility to some well-chosen stock mutual funds. Stock investors generally base their decisions on a company's future earnings and are willing to pay if they think the company will grow. Although not technically a measure of value, you should have a sense of how much debt a company is carrying. Debt isn't necessarily bad. You can set your sell level anywhere. If the goals you set are very conservative, you might miss some gains from time to time, but that's better than holding on too long. State securities regulators. State securities regulators have protected investors from fraud for more than 100 years. Securities markets are global, but securities are sold locally by professionals who are licensed in every state where they conduct business. State securities regulators work within your state government to protect investors and help maintain the integrity of the securities industry. Your state securities regulator can verify that a broker-dealer or investment advisor is properly licensed, and provide information about prior run-ins with regulators that led to disciplinary or enforcement actions, serious complaints that may have been lodged against them, their educational background and previous work history, and provide a website, telephone number, or address where you can file a complaint, and provide non-commercial investor education and protection materials.